The gentleman from Texas.
Thank you, Mr. Chairman, and welcome Secretary Paulson and Chairman Bernanke. I'm delighted the two of you are here today because I might just get to the bottom of the question I've been asking for many years of who's in charge of the dollar, because sometimes when I ask the Fed, I get referred to the Treasury and vice versa. But maybe I can get a better answer today. But I do want to acknowledge the gentleman from New Jersey, Mr. Garrett, for playing a part in bringing these hearings about, and also Chairman Frank for having these hearings, because I deeply appreciate it. But I would like to take a minute to just challenge something he said during his questioning, because he made the flat statement that there was no alternative to the Federal Reserve System. Now, I don't want to take my time to explain the alternative, but maybe later on Chairman Frank and I can talk and I can explain to him what an alternative might be.
That's not very likely.
But anyway, I would like to pursue the theme of the day, and that has to do with systemic risk. And there's a lot of talk about systemic risk, and also taken in the context of about market discipline. But you know, and we're talking so much about more regulations, and quite frankly, I think we should have a lot more regulations. But I think we should have market regulations. I would like to see a lot more regulations on the government and on the Federal Reserve, because I think it's the ability of the government through regulatory agencies as well as the Federal Reserve to disrupt markets and destroy market discipline. That is where I think our problem lies. When Enron failed, immediately they said, well, it must have happened because we didn't have enough regulations. So Congress immediately responded by passing Sarbanes-Oxley. Hasn't exactly helped our markets. You know, our markets today, almost every index of the market today is where it was 8 to 9 years ago. And that's not taking into consideration inflation, the devaluation of the dollar. So the markets are in severe trouble. They are very dysfunctional. But the real question is why? Why are they in such disarray? And of course, I maintain that they're in disarray because our monetary policy disrupts the markets, because we create interest rates below market rates. Right now, the money is free to the banks. They can borrow money at 2%. Real inflation is 10 or 12%. And we wonder why there's disruptions. When you have artificially low interest rates, you cause the malinvestment, you cause excessive debt to accumulate, and you cause the bubbles to burst. And then when they burst, the only thing we can come back for, more regulations and more inflation. We need lower interest rates. We need to print more money. But it is back to this basic fundamental problem that we think that we can compensate for lack of savings by creating money out of thin air. And it doesn't work. It's never worked throughout history. It's not going to work this time. And we can't bail ourselves out by more regulations and more monetary inflation. And that's where we are today. And I think the IMF is correct on this circumstances. They say we're in the worst shape since the Depression. And yet our government tells us there's not even a recession. This is utterly amazing. Ask the American people. Our government tells us inflation is 4%. Nobody believes that. I mean, just look at the cost of energy. So we have to someday get back to the fundamentals of what is a dollar, where do they come from, and who's in charge of the dollar. So my question is directed to Secretary Paulson, dealing with the dollar, because evidently he is the spokesman and he is the champion of the dollar, and all public statements are that the dollar is to be strong. Well, the dollar lost 20% in the last 2 years. In the last 3 years, we've created $4 trillion of new dollars. But when we go to China, we tell the Chinese we want a weak dollar. I would like to see if I could get the Secretary of the Treasury to explain this to me. Do we want a weak dollar or a strong dollar, and why don't we worry about the value of our dollar?
Congressman, we want a strong dollar. And what I've said is a strong dollar is in our nation's interest. I think you and I agree on that. At least I think we do. And I've had a career in the financial markets, and that has taught me that a strong dollar is in our nation's interest. Now, as I look at what's going on in our economy. And we're going to have some ups and downs. Every economy does. We're going through a tough period right now. But I travel around the world, and I don't see a major industrial nation that's got better long-term fundamentals than we do. I don't see a major industrial nation that I believe is going to perform better over the long term in their economy than ours will. And so what I say is I believe these long-term fundamentals are going to be reflected in the value of our currency. And what we need to do is to have policies that are going to enhance confidence in our economy. And to me, those policies are pro-growth policies. They're continuing to advocate for trade, for open investment. Now, in terms of China and the renminbi, what I believe in, Congressman, are markets. And I think it is there are many countries around the world that don't have market-determined currencies. There's no country as big as China and as integrated as they are into the global economy in terms of goods and services. And so in some ways it's an unnatural act. And they are not ready yet to have a market-determined currency, but we are encouraging them to move in that direction and move more quickly in that direction, because that will be a key also to their continued development and economic progress, which is important to all of us, because contrary to what some people may believe, we will benefit if China continues to grow and has a healthy economy.
Mr. Treasury Secretary, I'm going to cut you off because I received a letter, let me just say, from the ranking member and the ranking member of the Domestic and International Monetary Policy Subcommittee asking for a hearing on what's being done by you two gentlemen. The letter suggested not enough to protect our currency, and particularly to focus on its relationship to oil prices. And I have instructed the staff to schedule such a hearing. So the request that the minority has made for that hearing is going to go forward. We hope to have it, but we will have it before we break in August, and we can get further conversations on that.
I appreciate that very much.
And the gentleman from North Carolina.